Of the G7 finance ministers and central bank governors, we finalized an aggressive action plan to address the turmoil in the global financial markets and the stresses on our financial institutions. This action plan provides a coherent framework that will direct our individual and collective policy steps to provide liquidity to markets, strengthen financial institutions, protect savers, and enforce investor protections. The G7 is compelled to robust international partnership and cooperation. Never has it been more important to find collective solutions to ensure stable and efficient financial markets and restore the health of the world economy. Global financial market conditions are severely strained. In the United States, our economy has been facing a prolonged period of uncertainty, and our financial markets are experiencing unprecedented and extraordinary challenges. A root cause of this situation is a housing correction and a lack of confidence in mortgage assets, as well as a lack of confidence in many of the financial institutions that hold these assets. We are squarely focused on the immediate need to stabilize our financial markets and recognize that investor confidence is critical to restore liquidity and enhance the stability of our financial system. As recent developments have demonstrated, the market turmoil is a global event. Governments around the world have taken actions to address financial market developments, and international cooperation and coordination has been robust. It is critical for governments to continue to take individual and collective actions to provide much-needed liquidity, strengthen financial institutions, enhance market stability, and develop a comprehensive regulatory response. We must continue to closely coordinate our actions and work within a common framework so that the action of one country does not come at the expense of others or the stability of the system as a whole. Central banks from around the world have acted together to provide additional liquidity for financial institutions, taking the necessary steps to support the global economy. The Federal Reserve has established swap lines with 9 central banks to reduce pressures in global short-term U.S. dollar markets. Additionally, the U.S. Treasury implemented a temporary guarantee program for the U.S. money market mutual fund industry. Here in the United States, the members of the President's Working Group on Financial Markets, the PWG, made it clear that we will coordinate the use of our existing and new authorities to restore market confidence. Other countries are considering appropriate programs given their national circumstances, and we pledge to stay in close contact as they move forward with their plans. I briefed my colleagues on the work we are pursuing to implement swiftly and thoughtfully the new financial rescue package. We are developing strategies to use the authority to purchase and insure mortgage assets and to purchase equity in financial institutions as deemed necessary to promote financial market stability. As we develop plans to purchase equity, as in the approach we are taking to broad mortgage asset purchases, we are working to develop a standardized program that is open to a broad array of financial institutions. Such a program would be designed to encourage the raising of new private equity capital to complement public capital. Consistent with the legislation, any equity the government purchases through a broadly available equity program would be on a non-voting basis, except with respect to market standard terms to protect our rights as investors. Securities investors around the world have taken measures to enhance market stability by addressing market abuse. Here in the United States, we have taken steps to protect the savings of American people by increasing deposit insurance limits, and the European Union member states have raised individual deposit limits to an EU-wide minimum. The G7 and others are working together through the Financial Stability Forum, the SFF, to ensure a comprehensive international regulatory response to the financial market turmoil. FSF Chairman Mario Draghi reported to us on the good progress that he has been making in improving prudential supervision and regulation, increasing disclosure and transparency, and enhancing accounting frameworks. I am committed to making sure this work continues. We are also committed to tackling the next steps laid out by Chairman Draghi to be done by the end of this year and our ambitious agenda for 2009. Thank you, and now let me take your questions. Yes.
Mr. Paulson, since we know Japan and China are the two biggest holders of U.S. treasuries, do you think it's possible that U.S. may be seeking help from these two countries?
We are in close coordination and communication with Japan and China and other investors around the world. And we've all been, I think people have been very mutually supportive. And so we've worked together closely, and I expect us to continue to do so. Yes.
How do you ensure that deposit guarantee remains consistent from one country to another? What do you think of steps taken by Ireland and Greece to guarantee deposits, to provide blanket guarantee on deposits?
Well, obviously, what we commented on was there's an EU minimum for individual accounts. I've told you what our focus is here. Individual countries are going to have different needs, and they're going to approach the problems differently. But the point that we all emphasized is we've got the same objectives, and as we pursue those objectives, it's very important not to pursue policies that are going to undermine, global stability or other nations' policies. And I think we're committed to that goal.